Well, Nerses, it's really good to see you again. How are things going in Armenia?
Hi, Rodney. Likewise. Well, generally good. I mean, the lockdown is not that bad.
Good, good.
We started to work from the office, which is one of the things we missed a lot in 2020.
Well, I'm sure everyone's actually quite keen just to get back to the office and see each other in person again. Zoom can get awfully tiring.
Oh, absolutely, absolutely.
So tell me, when you talk with clients and future clients, what's the thing that you're talking the most about these days?
Well, one of the hottest topic right now in the Armenian tax legislation is transfer pricing. Armenia basically adopted a new tax code in October 2016, which came in effect from January 2018. And the transfer pricing chapter was in effect from 1st of January 2020. So it's a new topic for both taxpayers and the tax authorities. Our transfer pricing rules are designed and follow principles of OECD transfer pricing guidelines, but obviously there are some exceptions and there are some nuances that any taxpayer should need to be aware of. Well, first thing is that they're designed to cover relatively large taxpayers. So you'll fall under control if the total amount of all your control transaction exceeds 200 million dram in a year, which is roughly about $400,000. They cover transactions with non-resident companies, related parties, non-resident companies which are registered in offshore zones, and some transactions with resident companies. One of the things that is unique in the Armenian TP rules is that transactions with related parties who are mining royalty taxpayers, basically mining companies, they fall under the regulations. Taxpayers, they need to submit notification on transfer pricing transactions, which is basically the list of transactions in a year until 20th of April following the reporting year. And then within the tax authorities have a right to request a documentation which should be submitted within 1 month from the request. So in a sense, I mean, this is broadly what is covered under the new TP regulations.
Okay, well, that's quite a big topic then. And then I can only imagine that there are some myths and misconceptions about what all this means in terms of practicalities. If I had to ask you for your top three, what would those be?
Oh, absolutely. I love those. I love those. Basically, three questions that have been asked a lot. The first one, often senior people in senior clients say, okay, I mean, this is new, not only for us, but for the tax authorities as well. Can they properly audit our transfer pricing? And I say yes, as long as the tax authorities saw the opportunity in terms of additional tax collection. And you need to understand that now there is a fierce competition between various governments to collect more taxes. They'll go after that. So you cannot imagine how quickly they will develop the capacity. And you have to be ready from year zero. This is my clear message to all my clients. So the second one is also very, very famous because say, okay, we have 1 month to submit the documentation after the request. Why do we need to worry now? And my response is, look, even my team with all KPMG knowledge and all KPMG experience would spend 1.5 to 2 months to prepare good quality documentation. You just cannot do that in a month, and that will definitely lead to additional tax assessments. So forget about that. And the third one is also very common because it's a kind of a tax return. People think that it's a responsibility of a chief accountant to take care of that. It's a clear myth because firstly, I mean, to prepare a good quality documentation, you need to collect information from various sources in the organization. And these are the ones that the chief accountant is not normally working with, like marketing, sales, procurement. So it's not only that you need to submit a new report to the tax authorities, but you need to rethink about your business processes within organization. And sometimes you even need to rethink your whole value chain within the company.
Actually, Nerses, it's kind of interesting, right? That whole, we got a month, don't worry about it. A month does come around super quick.
Well, absolutely,
I
absolutely.
think, and I think your point's probably right as well. It's actually an opportunity to take a step back if you do it with enough time and think about, well, what does our business really look like?
Oh, absolutely, Aaron. Actually, some of my clients, they took it so seriously that they started preparation in the beginning of 2020, which allowed them to even adjust for some issues they might have faced afterwards if they didn't take it seriously.
Well, just fascinating. So that's a very timely topic to discuss and something that's very impactful for clients who are doing business in Armenia.
No, absolutely, absolutely. My message is, look, within some period of time, the focus of the tax authorities in terms of the tax audit will be purely on transfer pricing. And this is what we see from the international best practice as well. I mean, the largest cases that are in the air, I mean, they almost all relate to TP issues.
Well, it's interesting. Your point is a good one, which is every government is looking for money to fund budget shortfalls at the moment. So the best place to start is profit allocation.
Absolutely. I'm always comparing it, Rodney, with a pie. There is only one pie, and governments are fighting to get the bigger chunk from that pie. So,
all right. Well, on that note, Nerses, I'll let you be for the night because I know it's later in the evening in Armenia. Pleasure talking with you. Please
Likewise.
Please stay healthy, okay?
Likewise, Rodney. Have a good day.